Hey, good morning, traders and investors, and welcome back to the Trading Analysis Wednesday live stream show. I'm your host, Bennett Tyndall. We hope you're doing well this morning. Thank you for taking time out of your busy Wednesday mornings to join us. Happy Wednesday, August 10th. As you can see, bottom left-hand corner of your screen, equity futures are moving sharply higher this morning as July Consumer Price Index report came in lower than expected. Dollars coming off, as we can see over here. I'm going to take you quickly into the charts. We can take a look at what's happening in the dollar, and then we will bring in the trading analysis team. But quickly taking a look here at the hard right edge of the MotiveWave platform, you can see the big move lower. This is obviously a development that we've had our eyes on, and we're going to continue to be watching the retracement. The retracement that I'm watching, and we've got Alex back from vacation with us today, so he'll be taking you through the macro scene. But the retracement of interest that I will be watching here for the dollar comes in at around 104.44. If for some reason we do find support there and begin to turn higher, this could still be a counter trend pullback in the dollar, and this could also still be a corrective rally in equity markets. Fortunately, at this point, the path forward is relatively clear in regards to key decision levels in the indexes and what we should be expecting next if this is in fact upside resumption. So we'll get to the charts in just a few minutes. Before we get to the charts, let's bring in the trading analysis team. And welcome back, Alex. Glad to have you back from vacation. Good morning, Terry.
Hey guys.
What's happening?
Hello,
what's happening,
guys.
team? Did you have fun?
Alex was able to take a break.
Oh, for sure, man, for sure. It's been too long, right?
Yeah, well, too long without vacation also. So
I hear that.
yeah, I've cruised through the coast of Montenegro. It was fun. It was relaxing. I'm kind of renewed, so it's good to take time off.
Yeah,
I didn't. Yeah, it is.
I wish I was cruising that coast with you. It sounds like a good time.
Yeah, yeah.
Good morning, Terry. How are you doing today?
Oh, just wonderful, Bennett.
Yeah, big move up in the market.
This summer heat. We're getting a little, I don't know about you, but we're getting some rain showers down in southeast Texas, kind of moderating my summer.
We've had a few,
but I bet you're blistering.
Yeah, it's been mostly 100 plus, but we've had a couple of random thunderstorms and rain days, so we'll take what we can get.
Hurricane season is just now about to get peak here. Yep. August, September, that's the peak. So we've been fortunate, haven't seen much out there in the Atlantic. With that action's going to start picking up, so we have to stay careful.
Yeah,
my Generac's going to protect me.
You're ready to go, man. You've got it. You're covered. I love it. I wish I could say the same. I've got the computer backup power supplies, but that's the extent of my backup battery abilities for the time being. So maybe a Generac is in my future. We'll see. We'll see. So hey, let's jump into it. I'm going to take them through S&P 500 specifically. I feel the clearest objectives can be found in the chart of the S&P. If there's anything specific that you would like me to cover, please let me know. Chat included. Would be happy to address anything on your radar. As we were just looking at the beginning, equity futures are moving higher, S&P moving higher, NASDAQ moving higher. Had a big move up in gold. That is fading as we get closer to the open. We've got about 27 minutes left until the cash session. So, team, I'll be back on the other side. Anything, Alex, Terry, that you would like me to cover?
I mean, NVIDIA's report coming off their earnings about $2 billion from the prior number. That was a pretty big shock to the semiconductors, and the semis yesterday were pounded. But I think today might be is following the pattern that we've laid out. So you might want to take a look and show people what we see happening there.
Yep, happy to do so. A couple of weeks back, I put out a video update here on the Trading Analysis YouTube talking about the fact that semiconductors could be leading this market higher. So we'll cover that. Let's hit the hard right edge of the MotiveWave platform, and we will be back in just a couple of minutes. All right, let's hit it. Hard right edge of the MotiveWave platform. We're first going to look at price action in the S&P 500. And I apologize if you are still enjoying your coffee for the morning and you're not used to the very bright chart that I have here in front of you today. But I felt the two charts that I'm going to present today in the S&P really helps to kind of illustrate where we are within the overall pattern from the November and January highs and where we could be ultimately going from here. So what we're looking at on this particular wave count is the idea that, in fact, the June 16th low for the S&P 500 specifically marks the end of the correction. And in this particular wave count, it unfolded as a series of three-wave developments. We essentially have three waves down into Feb 24th, three waves back into March 29th, three waves down into June 16th, with the B wave being the flat progression that we had on track there for quite some time. The flat within the B wave was solid, rejected the 1272 of the B wave decline. And more importantly, the area of resistance that we met in the S&P 500 going back to early June was the previous support that was tested in February and March. So you can clearly see what was previous support turned resistance in June. And that's the area that we have been kind of toying with in the S&P 500 and looking now, based on pre-market action, to likely break above this resistance near 4160 to, let's call it 4200. Now, in the event the corrective pullback from the January high in this case is over, we should see the makings of what's referred to as a motive five-wave trend. For the time being, all we have evidence of is a three-wave move off of the low. We have five waves up into June 28th, a three-wave consolidation into July 14th, and now we see up in 1, back in 2, up in 3, down in 4, with a move up in 5 potentially still to go to complete this green minor degree third wave. The 1-6-1-8 relationship of wave 3 compared to wave 1 sits at 42.46, meaning it's entirely possible that the S&P 500 meets the 4250 area before we see any resemblance of a corrective pullback. But when we ultimately complete this green third wave, what we then need to see is a development that does in fact resemble a corrective consolidation. Typically speaking, with the wave 2 being sideways, it is possible that we also see a sideways consolidation in wave 4. But the bigger takeaway will come in the event we see a wave 4 that is more or less equal in price and time to the wave 2 of the same degree. We know corrections of the same degree will often tend towards equality. So that's what we're looking at here. We have 5 up, 3 back into July 14th, and another 5-wave trend. If that completes wave 3, this market will prove itself. It will truly begin to confirm the idea that we're coming out of this 7-month-long distribution move with a wave 4. That wave 4 should then yield a move up in 5, then an ABC, and then the bigger move into the end of the year. Now, what if in fact the move up off of the low has been corrective? Let's imagine, for instance, as we were looking at in an email this week, that crude oil holds support and turns higher. Let's imagine, for instance, the dollar holds support and turns higher. Is there a wave count that would offer us the clarity and put the move into context in the event that this wave count here, the bullish wave count, does not work out? And that view can be found right here. And essentially what this wave count would suggest is that the ABC down, the ABC up, and the ABC down into June 17th is just part of an ongoing correction. And if this is part of an ongoing correction, then it's possible that this is the dreaded triple combo, and we have another 3-leg move to the downside to come. If this is the case, we're going to complete into 3 waves in the X wave, the blue X wave here. Yes, we can still meet the 1-6-1-8 of the initial move up from June 16th through June 28th. So if you take a Fibonacci measurement of that, project it from the July 14th low, look for 161%. That takes us to 42.46. So we can still see 42.46 out of this market, and it could still prove to be a corrective trend. The way that this trend begins to come into focus is as follows. If this is truly corrective, and by the way, it is worth noting that we have retraced about 61% of the March 28th through July decline. So we've retraced about 61% in price into 61% of time elapsed in the March through June decline. So it's a fairly symmetrical and what appears to still be potentially corrective rally. That doesn't mean it doesn't prove to be impulsive and trend establishing for continuation in equity markets, but there is still a chance, and we can't yet fade the idea that this is still a, quote, bear market rally. But if it's a bear market rally, we know the X wave needs to complete in 3 waves. That means the move up here in C of X should then unwind impulsively to the downside. The minute we see this trend, or if I should say we see this trend reject impulsively to the downside, the trend will confirm under 39.45, meaning we reject somewhere between 41.60 and 42.50. We move immediately and impulsively through 39.45. We close under 39.45. That opens the door immediately to 36.36. That's a 7+% move in the index, and no other form of technical analysis could offer such clarity in regards to confirmation of trend. So that's the path moving forward. That's what we need to see. We need to see this market prove itself in wave 4 after this 5-wave trend completes, which I'm going to take you down to the smaller time frame in a minute. Whereas alternatively, if this rejects impulsively and we see the dollar and crude maintain a bid, we need to at least be aware of this. What we're looking at here in regards to 5 up versus 3 up, this is the exact same discussion that we had with you all going back into the March area high. There were many Elliotticians looking at the 3-wave decline into February as all of the correction, and they were looking at this as 1, 2, up in 3, looking for down in 4, and then up in 5. In this case, the C wave was about 161% of the A wave. But what unfolded was a 5-wave trend down. That 5-wave trend, the minute it violated the high of the A wave at 44.16 and then printed 3 waves back, that was confirmation of a move through the February 24th low. Exact same setup that we're watching in the S&P 500. So that's the index. Let me take you now down to the smaller time frame. We're going to go right back to the charts here that we typically cover. And essentially what we're looking at over here is that exact same pattern. The WXY completion, 1, 2, looking for 3, then 4, then 5. If alternatively it rejects this zone impulsively through 39.45, aka the June 28th high, we've got a bigger problem ahead of us. So that's the path moving forward. Dissecting price action here from the June 16th, 17th area low, allow me to zoom in and adjust scale. And what we've seen here from the low on June 16th is 5 up and 3 back, 5 up, 3 back, 5 up, a sideways 3, and now the markets are resolving higher in the pre-market. So that leaves the orange circle, wave 5, of green, minor wave 3, open to complete up towards the 1618 at 42.46. From there, we'll be looking for some resemblance of a corrective pullback in the wave 4 position. If alternatively we reject, as you can see, we're up against some fairly key price levels. If we reject and turn under 39.45, you know what happens then. So that's it from me. If there's anything else you would like to see, let me check the chat. For some reason, it keeps popping back over. I don't see the chat window. There we go. Cannabis stocks. You know, I tell you what, if we take a look, and I don't have that watch list on this particular computer, let's look at MJ. Let's look at the MJ ETF, and then we'll pass it back over to the team. Jason says, why does the recent wave 3 or B look like it only has 2 legs? Jason, are you referring in the S&P 500? And I'm going to leave it on this chart here for a minute and I'll let you respond. Why does the recent wave 3, okay, are you referring to orange 3 or are you talking about green 3 in general? Orange 3 or green 3? Let me know. I'll come back to that as I'm looking at MJ. Looking at MJ, it's entirely possible that this, you know, first of all, the catalyst, as I like to joke for this sector, unfortunately went up in smoke, but it's entirely possible that what we have here is just a big ABC move to the downside. Jason says, yes, so I'll take a look at orange 3 for you. Okay, one sec here. In the case of MJ, we have this big move down into March of 20. From March of 20, MJ does a very sizable 292% rally that proved to just be 3 waves. Notice we reject at right about the 786 retracement of the decline from the high of 18. And now we're approaching a quality of wave orange C compared to wave orange A, and we're also meeting the corrective trend channel. So if we do round out a bottom here, and this chart gives me 5 up and 3 back, then there's at least a trade opportunity within that move. But for the time being, I'd still be cautious with this particular sector overall, if it were me, personally speaking. Over to Tesla, I'll follow up on the wave count that we looked at last week with Todd. And just so you know here, we did move higher following the Wednesday stream. We got up in orange wave 3 to the 200%. Got a nice ABC down here into support. Watch 828, 833. I don't know what Tesla looks like this morning in the pre-market. I would imagine it's moving higher. Yeah, up to just shy of 9. So let's watch Tesla here. If anybody had the butterfly trade on that Todd had mentioned, you should be into some decent profits. And then, of course, over to the semiconductor industry group. As Terry mentioned, in the SMH specifically, we have evidence of a really clean trend-establishing 5-wave move. We had a put butterfly on with our clients. We still have part of that on, centered at 225. And the overall trend does suggest that we've got corrective completion into the July lows in the case of the SMH, and that we are trying to work uptrend resumption. In the case of NVIDIA, and what I love about this industry group is there are tons of 5-wave moves off of the lows in many of the semiconductor stocks. Here in the case of NVIDIA, when they came out with preliminary earnings suggesting or mentioning the fact that previous revenue outlook was going to be a miss. I think they were guiding 8.1. They came in somewhere around 6.2 or 6.7. Don't quote me on that. And that was ahead of their earnings report. So I see that as the opportunity for the company to underpromise, overdeliver. Perhaps there will be another piece of bullish news within their earnings report that ultimately results in support holding and turning higher. So I see this as an excuse for the stock to pull back. And I'm not going to read too much into it until we see what the report looks like later in August. So that's the semiconductor industry group. We've got a big trade plan putting together and coming together here in the semiconductor industry group with our clients that we're going to be exercising over at Trading Analysis. So anxiously awaiting confirmation of trend. Looks like NVIDIA is up to 176 here in the pre-market. Maybe your B wave bounce is coming into focus. I find it hard to believe that that's all of wave 2. All right, I've taken far too much time. Back over to the Trading Analysis team. What do you guys think? Lows in the indexes, going higher, or bear market rally? Uh-oh, I've lost you. Maybe my speakers have...
I'm muted. That's bad.
There we go.
My bad.
No worries, no worries.
Yeah, I don't... Yeah, go ahead, Alex. I'll let you talk.
That's tough to say, in my opinion, yet.
Yep. I hear that. And then before we go, I'm sorry, Jason. So in orange 3, okay, here's the thing about a third wave position. Many people who are new to learning Elliott wave have a tendency to think that wave 3 has to be the longest sequence. And wave 3 has to be the longest within a 5-wave move. Wave 3 does not have to be the longest, but it most certainly cannot be the shortest. In a perfect world, if the July 14th trend, the trend wave that started on July 14th, in a perfect world, if this was independent of this green third wave, then yeah, we could expect orange 3 to be better than 100% of orange 1. Orange 3 wasn't even 100% of orange 1. But you always have to consider your proximity to the higher degree fib targets. And in this case, the higher degree third wave in green 3 has its 1618 at 42.46. So the only way we can imagine a nice, clear, extended orange 3 up to 161% of orange 1 is if green 3 is then going to be 261% of green 1, and I find that difficult to believe with the overhead resistance we have, the still mixed sentiment, and some of the overbought conditions that are beginning to present. I will admit the subdivision of orange 3 is a bit subjective, but I do feel it is the highest conviction decomposition of that orange third wave. The orange wave 4, it does have some interesting fib going here. This kind of did 3 down. This did A, triangle B, measured move up in C. So basically that first A wave rally got sideways consolidation and then a measured move break higher. I think the bigger takeaway, regardless of what the subdivision is that we have evidence that orange 5 is still ongoing, and that leaves green 3 open up towards 1618. All right, Mr. Terry Long, sir, I'm going to get the screen set up for you. He's going to take us through the Optima platform, taking a look at sector focus. Let me know when you are ready, and I think I've got everything good to go.
Good to go.
All right, he's ready. We'll hit it on the other side and take a look at the macro scene, as I'm sure you guys are eager to check that out, as we've got Alex back. Terry, take it away, and we'll catch you in just a couple of minutes.
Good morning, traders and investors. I'm Terry Long at TradingAnalysis.com here with your weekly sector focus. So after seeing 3 weeks of gains, the indexes are starting this week off by hitting the snooze button while they consolidate those gains ahead of today's CPI report. And as you know by now, the CPI figures came in about 0.2% better than the forecast, and the markets have started moving higher in pre-market action. So let's take a look at last week, though. The S&P looked to have started to ease off the throttle, as it really only closed with a weekly gain of 0.36% after 2 hefty weeks of moves, but it still was a positive move. The NDX also realized a third week of solid upside gains, closing actually 2% higher before Monday and Tuesday's price action pulling it back. Now, last week, sector leadership was found here in the technology sector, rising 1.94%, and the communications sector also up about 1.5%, and the consumer discretionary sector gaining 0.91%. All three of those outperforming the benchmark S&P, including financials there as well. Now, the financial sector was up about 0.78. But energy sector took it on the chin. Crude prices fell sub $90 a barrel last week. At the close, we saw the XLE decline a hefty 5.35% on that move. Healthcare, materials, real estate, and staples also closed the week to the downside. Fast forward to what's happening this week. Starting out with a whimper, I would say. We see the S&P is down about 0.55% before the pre-market action stepping in. And, of course, we are seeing a bounce on that. The NDX so far this week down 1.51, but I think we're going to see a lot of that retraced as soon as the markets open. And semiconductor stocks, like I said, are correcting after their sharp rallies, and that's what had been pulling the tech sector lower. Now this week, the energy sector is getting a bit of a bounce this week. Crude prices rose back up just above $90. Let me pull this little table over here. Let's see, it's my chart. Let me get my chart out of the way, and there we go. So we're seeing this morning, we're seeing real estate taking the lead in the sectors, up 2.88%. I would guess that mortgage rates are going to be improving there. That's possibly giving the real estate an extra kick there. Energy, utilities, financials, and communications all up just almost 2% or higher for the week. Now, the relative strength sector leader scoreboard shows the technology and the consumer discretionary sectors rising up into the improving quadrant, sporting those blue improving weekly trend vectors. Now, while we did see the XLC make some really nice gains last week, that sector continues to show a lagging weekly price structure, even though it does remain here in the improving quadrant for now. But the recent exodus from the leading quadrant of these staples, utilities, industrials, and healthcare sectors, they've moved down into the weakening quadrant. Interestingly, though, I'm going to zoom in here. You can kind of see the industrials kind of being a little wishy-washy. and it's lost its downward track. It actually retraced. If I animate this, you can see that hook back to the north and then now back to the left again. So industrials has got some interesting stocks in it that are actually thinking about a possible reversal. We are seeing the momentum fade coming off some of these, but the decline is still continuing, and especially here in the energy sector, which has continued to push and deteriorate their momentum and relative strength conditions as they're moving in that southwesterly heading. Now, the financial sector, material sector has now joined the XLF over here in the lagging quadrant. Materials continuing to fade. And the financial sector also with a very short tail, but maybe it's attempting a little bit of a turn. Very early to say that we're going to see much positive. We look in the details of the XLF, it's the large banks that are outperforming, but it's the insurance groups that's underperforming. And so there's an internal rotation happening inside that sector that's kind of holding everything back. Now here's the real estate sector, which I said was up 2.88% this week. And you can see it's got a blue rising trend vector. It had pushed deeply down from the lagging quadrant. Just animate this back. So we had, whoops, went too far back. There's the hook right here in the real estate. This happened back on May 13th. So basically most of the whole summer, we've seen the real estate sector in a fading condition. It pushed all the way down to the edge of the lagging quadrant, and then it started a northerly retrace. Last week, it was still pushing to the southwest. Now it's pushing much more to the north. So one more thing I want to share with you. I want to take a look at the growth and value, and I'm going to just zoom in here on this weekly RRG of growth and value. And what I have here is I have these broken down. I'm going to only select the, let's see here. Yeah, I want the ones with the highest momentum, and that's the ones that are outperforming. So this here is the Dow Jones Large Cap Index. Okay, large cap would include everything growth or value, but this is just the these are just the growth. What we have here is we have mid cap growth being the first to enter the leading quadrant. Small cap growth has been accelerating quite rapidly and only recently seeing a little bit of a momentum fade. Followed behind that is the overall growth. This is the growth index itself, the same as the IVW, and then this is large cap. So large caps so it's been mid cap, small cap, and then large cap. Okay, large cap is the latter one, but overall we've been seeing that improving structure here. It's basically that's the decomposition of what's in this IVW right there. Is if you look at those. So I'm going to leave that for you, unless there's something specific for you like me to look at. I'll send it back to you, Bennett.
Very good. Much appreciated there, Terry. Excellent view looking at growth and value rotations there. All right, let's see here. We're going to get the screen passed over to Alex.
Got it.
Terry's on top of it. I missed it. It's a race every week.
It's a competition. See who can push the button faster.
That's right. All right, Alex, let me know when you're ready to go. We've got about 1 minute left until market opens. As you can see, bottom left-hand corner of your screen. S&P futures are still higher, trading just shy of 4,200. Taking a look at, ooh, that's interesting there. NASDAQ 13.3s. Taking a look at gold. Gold moving up to 18.24. Still looking at 18.20 resistance. The move we've had off the low in gold, Alex is going to talk about here in just a few. All right, sir. You ready to rock?
Yeah, let's go.
All right. He's back from vacation. Take it away, and we'll be back on the other side to wrap up the show.
Hey guys, welcome to the macro outlook on this trading analysis YouTube stream. So let's start with a couple of things after the CPI. If we look the next Fed meeting, which is on 21st of September, 60.5 is probability that we are going to go in the range of 2.75 to 3. And if you see on November 2nd, the probability already that we are going to go just 25 basis points is starting to grow. So 50 basis points now comes around 48.9, and this picture will change. We're going to have a couple of more reports in the future. So this is not fixed. But of course, if we approach the Fed meeting in the last couple of days, the percentages will stay. But we still have time, of course, until September, November. So most likely, we will stay above 50%, as you can see, for this next move. But the 2nd of November, if we have another lower print on inflation, it seems that this 25 basis points will actually grow, and we will be out of 50 basis points move, which will actually maybe anchor the further appetite of Fed to pursue inflation with rates. We might settle up for up to 3.25, and I think this will be the place where we are going to stop, at least temporarily. So if we look 10-year yields, you will see that we are not still out of this consolidation here. We did look this as a potential 5-wave move on the upside. There is still no wave count invalidation, which will signal us that the move down has started. That will be around 2.025. We are trading at 2.74 currently, and this still looks like some type of a consolidation with a possible one more move on the upside. We simply need to see more downside movement actually to anchor this wave 5 here, which we cannot do for now until we see really the wave count validation, and then the probability will increase largely that actually this first 5-wave move is done, that we are going to go and take a pause, which was basically the main theme of our macro outlook for the last couple of months. So as we have seen the commodities lower on many fronts, a couple of even months or two back, our main theme was that actually Fed will stop accelerating rates higher in one moment, and I think we are approaching that moment very soon. So we are still going to actually portray this as a potential triangle with a note that we are going to monitor this, and if we break this 2.025, we will definitely turn our focus to lower levels. In the European front, we are still looking this impulsively. ECB hiked 50 basis points. As I said before, I don't think ECB is in the similar situation as Fed. We are testing now this channel line, which was actually produced even 40 years ago, as you can see, of this deflationary move on the downside of the 10-year bond. So this is just a German equivalent of the US 10-year. So for now, we are still going to look this impulsively as a potential wave 3 completion with a little bit more upside. And I still think that ECB might hike a couple of times, but that will be it. And it will be stretched, of course, over the time. But anyhow, we still need to observe this from the Elliott wave perspective as an impulsive move on the upside. We are still far from invalidation. Actually, this smaller wave 1 of the intermediary potentially wave 3 development is in the minus territory. So we are trading now at 0.89 in plus. So we are far away actually to negate this wave count. So we are still going to stay on the bullishness in rates temporarily in the European Union. Dollar index is moving lower. I still do observe this as a wave 4 pullback with the one more prospect of the 5th wave on the upside. We don't have also on the dollar index enough of the downside movement actually that we can claim or actually increase probability that the cycle of the dollar moving up is done. So there is no clear evidence. So I will stay with a wave 5 higher I'm very interested to see what the dollar index will do around 101. So I think potentially if we get more directional to the downside, this will be a fourth wave floor or a potential low if we don't develop some type of a triangle. But anyhow, we should finish this, if this is still a bullish outcome, around 101 to 102, which also can present lower levels of the A wave in the potential triangle development. So I do think dollar will continue lower, and this will be my focus levels. If we pass them, especially impulsively, we can anchor wave 5 here and then look for a larger and a multi-months retracement in dollar further lower towards 88, 89, as you can see, where it's going to be the previous wave 4 support levels, and usually support level for any type of a corrective or a impulsive bearish development in dollar. If we go to the Thompson, no, this is oil. Oil is still not doing much here, as you can see. I have this still on a bullish wave count until we pass some of the levels on the downside. I'm going to continue to pursue the potential triangle or a complex correction here in oil until I see the break of this key important 90-95 levels. And RSI is very low on this daily. I don't think that's the same situation on weekly. Still a little bit more on the downside. So I'm still going to pursue the wave count that this is some type of a development which will take us higher in the next couple of years. So I don't see any evidence to also anchor or actually reduce this wave 4 and wave 5 up to here. We might have a failing double top in oil, and then actually we reverse impulsively to the downside. So we don't have any evidence for that, only 3 waves down. So there is a reason for us to stay pursuing the bullish outlook still on the oil on the upside. So net gas is probably posted the wave 4 lows. I was looking for a little bit more a wave 4 kind of a triangle or a more complex correction. It seems that most likely either wave 5 completed here and the wave 4 is started, or we are going to finish that. And very nice clue about it is that if we do a 3-wave pullback, then we can expect a further acceleration on the upside. We are already half of August, so September. So I think optimistically, maybe end of October, November, but if we start moving earlier higher, that will actually tell us that across next couple of months, the net gas prices will actually finish above 15 or around 15 on the upside, which actually shows that this whole move is still uncompleted. If we look something interesting, and I will touch that by doing the gold and silver wave count, we have been very vocal on these two charts during almost, I think, a whole last year. So we have a partial confirmation that actually our fib zone held pretty nicely on the gold. We do consider this on a weekly level, especially bouncing from this 200 moving average and a couple of wave labels that we have here. Also a couple of nice fib levels. I do see this to be an impulsive move from these lows. If we go on a smaller time frame, you will see definitely this starts to develop in an impulsive fashion. After a pullback, we should see an acceleration on the upside. And of course, I want to see this orange wave 1 accelerating further higher, confirming and actually doing the signature reversal move for a further advance on the upside. Most likely the probability now increases substantially after this smaller 5-wave move, that actually this was a low, and it will be a longer term low for gold until we actually trace out another and most likely definite 5-wave move above 2,500 or very close to it in gold. I want to show you also the gold silver ratio, and I'm doing that because of a particular thing of the chart of silver. We have been at Trading Analysis pretty skeptic about the silver going higher, but of course now the situation is changing. I have a couple of charts, so don't mind me searching for. Yeah, so this is the one. So we have been looking for a silver lower, and as you know, that was the theme from here, because we have only seen a three-wave upside movement in this attempt to break this large consolidation which has been going for a couple of years, and a straight five-wave move lower. So we do have some type of a five-wave move from the lows, which actually will signal us that potentially we are in a larger degree wave one in silver, which will be a very interesting development, because looking at this gold-silver ratio, which I have presented a couple of times, especially if we see an impulsive move lower, actually would signify that the silver will be much better play than gold on the upside. So this is the gold-silver ratio, and if we look the basic ABC structure from these highs, we can identify a five-wave move here on this ratio. I think this is a small truncation in a wave 5. After that, we have a nice five-wave move up in A, triangle B in B, and five-wave move up in C, reaching 0.618, which is a common relation in the corrective process when you have a triangle as a B wave or sometimes as an X wave. So we reached this level pretty precisely, reversed from it. On a smaller time frame, I do see a potentially a five-wave move, but of course, if you want a larger confirmation, you will see a straight move down below 72 or around it in a wave 1, and a pullback in a wave 2 will signify a greater acceleration of a silver price over gold on the upside, and that will last also until possibly end of 2023 and beginning of 2024. Depends of these two corrections how much time they will consume. So watch out on this one. It can be a cool thing. Maybe everybody will thinking that the gold will move fiercely on the upside, but actually looking at this chart, especially after confirmation, the silver will be one moving more fiercely than gold after we see this larger time frame confirmation. So Crypto Lab tomorrow is on if you want to see what's going on cryptos. So please join me tomorrow on the Crypto Lab with Alex. We have been looking for a bullish reversal already for a couple of weeks in cryptos. On some of them we see that, on some of them we don't. But in general, we do stay with our overall themes that we presented in Crypto Lab, that we are still in a corrective process, and this might be a partial end of it or a complete end of it. The picture is pretty much still kind of waiting in probabilities on which side we will go on a larger time frame. So back to you, Bennett.
Very good. Much appreciated, Alex. Glad to have you back from vacation. Good work there. Love to see the fact that in the dollar and taking a look at the dollar specifically as well as crude, you're still acknowledging the possibility that we do go higher. You know, it's interesting if we take a look at, and Terry, Alex, you guys both know this, when we're trying to substantiate various segments within a wave structure, specifically a motive impulsive wave, we all know we often look for a peak in RSI, a peak in volume, typically in a wave 3 position. And what's interesting about that 130 print high for crude in March was on the daily and weekly, that's where we see the RSI peak, and we also have a peak in volume in the energy sector within that sequence. So very curious to see how that 87, 88 support holds. If it holds, great. If not, we could have a 5-wave completion up there and a more significant top, as you were noting.
Yeah, I agree, but I still have my reservation just because of the fact that, as you know, for most part of last year and this year, dollar was going up with many of these commodities, breaking the usual correlation. So this correlation kind of goes back and forth in the last year and a half because of sensitivity of oil and the war we have. So I'm still a little bit cautious. I will, as you pointed out very well, wait for a final confirmation, and then we can do some anchoring on these levels, you know.
Yep, absolutely. Looking forward to it. Some good moves there in gold and silver as well. If you're interested in crypto coverage, check us out tomorrow morning, 9 a.m. right here on the Trading Analysis channel for Crypto Lab with Alex. Terry, Alex, excellent work, gentlemen. Appreciate it, as always. Viewers, if you did enjoy the content, please subscribe with notifications. And we noticed about 45% of those of you tuning in are not subscribed to the channel. It doesn't cost you anything, helps the YouTube algorithm know to distribute the content accordingly. So we appreciate it. Check us out anytime, tradinganalysis.com. Members, we'll see you in about 14 minutes for our weekly member webinar series. Markets are open. Watch resistance. I think this CPI bid is ultimately faded after wave 3 resistance is met. Get a nice wave 4 pullback, shake out some longs, lets the market force those who did accumulate to kind of question their conviction in any pullback. So we'll leave it at that. We'll be back next week, and have a good one.
See you later, guys.
Take care, and we'll see you next week.